And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good afternoon and welcome to the Market Recap, Thursday, March the 3rd. I'm John Hoagland. Thanks for trusting me with your time. Interesting trading day. Thanks to all of you that attended the inaugural event of Make Hoag Money. We made a little bit of money this morning. Had some really important trade ideas that played out really for the rest of the day. We're going to talk about those as we get through the charts today. Crude oil, 112.24, that swing high from August of 2013, ends up kind of being resistant for our regular trading hour session today. That along with some overnight longs, it finds resistance. We're seeing a head and shoulders on the 30-minute chart. We'll see that shortly. The E-mini S&P and the Nasdaq. Weekly kickoff highs on both markets proved to be too expensive. Value area special situation plays bring opportunity. Gold finally finds some good support at the weekly kickoff high. The euro US dollar really just trying to sneak up on its 52-week high, getting closer and closer. The 10-year weekly kickoff high still providing degrees of some pretty decent support. And the nat gas, hard, choppy trade today. If you were trading nat gas, it was a pretty tough trade. As that persisted in keeping the weekly kickoff level somewhat magnetic and really choppy on both sides of that important inflection level. As far as news is concerned, Chairman Powell has ended his testimony, and I think he gets the award for the quote of the week, maybe even the month. Check this out. He says, more inflation now risks deterioration in inflation expectations. More inflation now risks deterioration in inflation expectations. More inflation means more inflation. That would certainly deteriorate inflation expectations. I saw that. I was like, what is he talking about? It sounds like somebody else that we know. He did mention that Ukraine, the war, Russian-Ukraine war is exacerbating supply chain woes. Apparently, the U.S. is going to be sanctioning more Russian oligarchs and their families. U.S. lawmakers are now pushing to ban Russian oil here in the U.S., but a lot of U.S. petroleum companies have already beat them to that punch. Russia and Ukraine apparently have agreed to a third round of talks soon. I just keep praying for peace and freedom and strength. Saying a prayer now. Hopefully you had a good trading day. Again, I thought the Make Hoag Money session today was a lot of fun, and I think we saw some very cool opportunities for us. Now, if you were there, you saw we had a winning trade that we cut off at about a $300 winner. Remember, these are your decisions, not mine. We had a good short on. We pulled back a little bit. We said, do we fish or cut bait? The general consensus was to cut bait, so we cut bait. We had one small loss after that, but I helped pad the account a little bit for us all today. So it's going to look a little bit better next Thursday when we do make Hogue money again. Good afternoon, Scott saw, and he conquered. If that first trade would have been held longer this morning, oh my goodness. Well, I did get back into it after the session was over, and like I said, I've padded that account a little bit for us. Tachyon, good morning, Bill Phillips. Spencer, wheat futures up 3 days in a row, up the limit 3 days in a row. Man, that is something, right? Theo, good afternoon. Luis, rusty golfer, broke a rule and went against the trend. Took an L. Good afternoon to you, Rusty. They can't all be birdies. I know I've put up my share of bogeys and double bogeys. Vince, good to see you. Yeah, it's a wild ride today. Spencer, did some foolish things myself this morning. Need to cool my jets a little bit. Just be patient. Take your time. Let the markets come to you. Devont was thinking about the same thing all day with that trade we had in the make Hogue money. Dan, first horrible day in 10 days was broke the streak and the combine. Yeah, we don't have to break the combine to break the streak. Here's a little personal experience with that. Dan, I used to, be very in tune with winning trades, winning periods of time, winning days. You get a bunch of consecutive winning days, and you start to get this. You feel this pressure, like, okay, I got to keep the streak going. And that one day when you start with a loss, and you have another loss, and you have another loss, and you kick your heels in the dirt, and you say, you know what, I can't have a losing day, and you just absolutely blow up. I found that when I start to feel that pressure to keep the streak going, I tend to break the streak on my own, in my own way, on my own terms, if you will. Typically, when I start to feel the pressure of keeping a streak going, I take a day off. Streak broken. Got to come back the next day, start from zero like we should every day. But I get it. It's difficult to let that streak go. Ocean Blue, are we doing live trading Zoom today? We did that earlier, Ocean Blue. We do that at 8. Well, we started about 8:20 a.m. Central Time today. We watched the open in the S&Ps. We took 2 trades, 1 winner, 1 loss. We'll look forward to seeing you next Thursday, hopefully at approximately 8:20 a.m. Central Time. Mickey Man, good afternoon. Norman, good afternoon. Zerain, Deg, hello. Aaron Collier, right up there with you, brother. We'll pick it up another. Do better next time. Consider taking tomorrow off. Yep. You might want to consider taking a day off after you've had a really good day. We tend to see traders being at much more risk when they've had a good trading day. The next day, they're always at risk for a big down day. Deg, good afternoon, nephew. Norman, yes, we pray for peace too. I hope we all do. Where's the live Zoom session advertised? It's only advertised on the forecast and the recap. Here is the link so you can sign up for Thursday's session today. I'm going to put it in the chat here. But that's the link, so you can sign up now and be ready for next Thursday at 8:20 a.m. Central Time. It is something we're really just trying We're just trying it out. I thought today went well. I think it was a lot of fun. I think there was some really good opportunities for us to look at markets and talk about it and make collective decisions on it. And we are doing exactly what we're saying. I'm leaving it up to you guys to make me money. Casey, what's up? Carlos, good night from Tel Aviv. Good evening. Deg, how to use those brackets. Norman, yep, great advice. Good. Salt Bones, hey, how you doing? I haven't seen you in a while. What's going on? It's good to see you. We got to catch up one of these days. Carlos and SK, good advice. Don't overtrade. Yes. You find yourself looking for trades, you might be starting to overtrade. Yes, you can all join in for Make Hogue Money. It kind of works like this. Anybody that's in there, I'm going to say the first 5 people who say not it are going to have their mics turned on. You're going to be able to talk. We're going to talk. People in the room are going to talk. Other folks are going to be able to chat using the chat. We're going to take a look at trades. We're going to take votes on whether we take trades, whether we go long, short, why we're thinking about taking these trades. And when everybody agrees, we're going to see, I'm going to put on a trade. We did it in Sim today. We'll probably do it in Sim again this coming Thursday. Just testing it out. I'm all in for doing it on a live account. No problem with that. But we will see you hopefully Thursday. Aaron, since we did not have more participation in open interest and fell back into value today, would this kind of divergence be a good catalyst to predict a down day? Talking about the S&Ps, I'm assuming. Aaron, why don't we go ahead and take a look at that? Going to see what the open interest does tomorrow. I haven't had the chance to really postulate that. We got a big dog here saying hello to everybody. Lacey says hello. Yeah, she always likes to come over here and have me pet her when I'm busy. So yeah, we'll take a look at that, Adam. Or Aaron, I should say. All right, let's jump into the charts. Stop that, you. Just want attention and you want food. Okay. So here's the crude oil. I'm going to get my notes out from this morning so we can kind of remember what we were discussing. Swing highs achieved. We got to that 112.24. We even got to that 114.18 from April of 2011 in the overnight session, but we were unable to get there. Lacey. Aaron says hi. Aaron says hi. We will get you on screen here shortly. So we talked about the volume yesterday, which was not all that impressive, and we lost 41,000 contracts in open interest. Not good for a continuation move. As a matter of fact, between the Tuesday and Wednesday, we lost over 100,000 in 2 sessions in open interest. This is not healthy for a market to move this way. An auction needs to build participation in order to continue in this direction. So there's maybe some question as to whether this is prepared to continue right away or if we're going to consolidate or get some sort of a pullback before continuing. I think there's any doubt that we're in a problem with supply, and that is going to affect price, but it's not necessarily affecting price in a positive way here. It's more affecting price in a weakening way. Here's the 30-minute chart, and what we're talking about here is potentially creating a head and shoulders. So here's our overnight high. Here's 14 and change, which was the April 2011 high. Here's 112.24, right about here, which kind of capped off our upward momentum for the day. Is that an accident? I don't know. I don't think so. The markets are extremely visual, and you can bet that a lot of traders and investors were watching those swing highs for potential areas for resistance. Well, it turned out to be resistance at that 112.24 level today. Now we'll look at what we're doing. We've got a shoulder, we've got a head, and we've started a shoulder. So we may be looking at a potential reversal pattern here that may or may not last for a very long time. But if we're looking at the neckline's from here to here. If we measure the neckline, let's take a look. I'm just going to use a vertical line. I'm going to start here at this line here at the bottom of the neckline. I'm going to go to the top of the head. From the bottom of the neckline, why? From the bottom of the neckline here, that this measured move could take us all the way back down to 96 bucks. Could it be? Would it be? I'll bet it's not going to affect the gasoline at the pump very much if that happens, but we're going to keep an eye on that and see what happens. S&Ps. Okay, we were largely still in balance this morning. We were looking at weekly kickoff high and the highs of the area of balance that we've been in for the last 4 or 5 sessions as important levels. No big increase in open interest on this big move to the upside. We lost 26,000. That's the estimate. Balance and breakout rules apply. Before the open, we had jobless claims come out. Jobless claims gave us a nice little boost to the upside, but where did we run up to? We ran up to 44.11, which is our weekly kickoff high. This is an important inflection level where we look for longer time frame traders to need to or be forced to adjust inventories. The market opens and trades to the high 44.14. So 3 points above it before rejecting and then falling back into yesterday's range. So we opened with a gap. We looked higher. We found resistance. We came back, closed the gap. Then we started finding perhaps some acceptance inside of value from yesterday, which then puts the value area special situation play into play. So this morning, we shorted 44.11 in make hold money. We had agreement on that, and we looked at the market. It came down and closed the gap, and everybody was, I think, probably looking at the gap close as a potential support area. As the market pulled back, we got nervous, and we decided to cut bait. For last thing we should have done. We should have stuck in this and seen if we had the opportunity to accept inside of value from yesterday. Upon acceptance, that puts the value area special situation in play. And that rule says if we reaccept inside value from the previous day after opening outside of the range, there's a high probability of price moving to the other extreme of value at some point in the session. We didn't have to wait too long. Within 2 hours of the open, we had completed the value area special situation and basically ranged inside value from the previous day. A little bit of repair down here as well. So a really sweet opportunity for our first day in make hold money. You got to remember the importance of these inflection levels as levels where big things can happen. Here's the Nasdaq. Very similar. Opening with a gap, never looking above weekly kickoff high in the regular trading hour session. So the high of the regular trading hour session was 14,355, where weekly kickoff high is 14,350. Really, this should be down here. So we did look a little bit above it. This was a little bit misplaced. Sorry about that. So we did the same thing. We looked above it. We rejected. First thing we did was close the gaps. Next thing we did was accept inside value from yesterday. The next thing we did was to trade all the way to and through the value low from yesterday. Pretty decent opportunities. Pretty decent opportunities. Gold, tough trade today. We see the market putting in higher highs, higher lows. We lost 3,000 in open interest, however, yesterday, as on a pullback towards weekly kickoff low. Weekly kickoff low is supportive for us today, nicely, if I remember correctly. So here's our open, leaving the opening range at the high, trading right to weekly kickoff low, coming off a little bit, testing back below it, rejecting below that weekly kickoff level. The market continues to push higher. Didn't take out the opening range in regular trading hours, but by the time we got close to the end of the trading day, the extended trading day today, we had traded back above the high of the opening range. Where do we settle? We're probably going to settle right around 1936. The euro is still bouncing along the bottom here as the dollar gets closer to its 52-week high. The euro keeps looking to the downside. It is not huge volume on this move. Yesterday, we added a lot of open interest on this move. But remember, we are coming into rollover. That rollover is going to blur all of this information. The lack of volume today is because it's going to be rolling into the March contract, I think, early next week. I believe on Tuesday it's scheduled to do so. But we'll be watching volume, and we'll be letting you know the right day. Not that there's a right or wrong day. It's just when the volume moves, that's when we move. Here's the 30-minute chart. Opening in range and value. Just kind of flopping around in here before rejecting value from yesterday and driving lower. Hard trades, not easy trades in the euro or in the nat gas today. You know, when we open in range and in value, that first hour of trade, you know, we did put in a very small initial balance. The high of the initial balance held in the third half hour of the day. That may have been enough to tell us to look for the opportunities for shorts, but a tough trade nonetheless. The 10-year. Support a weekly kickoff high. Big jump. Powell starts speaking yesterday. Yes, rates are going to be going higher. The 30-minute, that's nat gas, not falling for that again. So here's our weekly kickoff high. Broke above it, came back to it, support. Flopped around, back to it, support. Just kind of dragging along the bottom here. 2 weeks from yesterday is FOMC day. Get rested up. Now for the nat gas. All right. We did not bring in new business on this breakout above weekly kickoff high. We lost business. That's not good for an upside auction. We're still attempting to break out of this 9-10 day balance area we've been in here, not very successfully. Look at what a nightmare this market was today. Sometimes this market is very clear, sometimes not so much. Balance and choppiness around weekly kickoff yesterday. Balance and choppiness around weekly kickoff today. Tough trades. Tough trades. We'll be monitoring for better opportunities. We'll be monitoring. All right. So my son just got home. Hi, Luke. Hi, Luke.
What's up, House?
And now Macy's tearing around the house.
What's going on?
You want to say hi to everybody?
Who's everybody? Who's everybody?
We're doing the recap.
Let me pick Alicia. Let me pick Alicia.
Here's my little son. Hi, Lise.
Hi, Lise.
All right. Good to
All
see you,
right.
buddy.
Good to see you, buddy.
Dan, I guess the
Dan,
Delta
I guess the
Divergence
Delta
yesterday was
Divergence
hiding
yesterday
the
was
weakness
hiding
and
the
equities
weakness
of
and
today
equities of
after all.
today after all.
We didn't really
We
touch
didn't
on
really
that.
touch
I
on
wanted
that.
to
I
touch on
wanted to
that.
touch on that.
Yesterday, that
Yesterday, that Delta
Divergence did not
Divergence did
provide
not provide
the
the
late spike
late
that we
spike that we
tend to
tend
see
to see
when we have a
when
Delta
we have a
Divergence
Delta
like that.
Divergence like that.
And we lost
And we
open
lost
interest,
open
which
interest, which
indicates it was not an accumulation of new longs. There was a
There was a
liquidation of
liquidation
old
of old
shorts.
shorts.
Taking a
Taking a liquidation of old
If you
shorts.
think about
You
it, if
think
you're
about
short,
it. If
you
you're short,
have
you
to
have to
buy
buy
to get out of those
to get out of those
shorts.
shorts.
That took
That
buying
took
power
buying power
out of the
out of the
marketplace, which may have
marketplace, which
had
may have
something to
had
do
something to do with the
oh,
oh,
I still got the echo going, don't I? Sorry about that. Okay, I cut it off now. Echo, lots of echo. Yeah, sorry about that. I'm going to get a new computer, and that's going to solve all those problems. It's we got two different computers working this program, and that's what happens. I apologize. So yeah, that was Luke. That was Lacey. Now I wanted to talk a little bit about the Delta Divergence that we saw yesterday. We even saw it to some degree today. The Delta Divergence that we saw yesterday in the S&Ps. We had price moving higher with the more aggressive sellers decreasing Delta, the value of Delta throughout the day. That's more aggressive sellers. Okay? You would think the more aggressive sellers would be able to push price lower, but they weren't able to. Typically, when we see a Delta Divergence like that, what I'm looking for is a build in open interest in either direction. Yesterday, the Delta Divergence to the upside, price moving higher, Delta moving lower. I would be looking for an increase in open interest, saying that was longer, stronger buyers accumulating new longs, but it wasn't the case. We lost open interest, which indicates that that may have been longer, stronger traders liquidating shorts, covering shorts. And with that case, with the lack of open interest and increase in volume on that upside move yesterday, if it was short covering, if you think about what you have to do to cover shorts, you have to buy. It's initiative buying. Initiative buying is very strong. Therefore, the fact that we lost open interest in the S&Ps yesterday on a Delta Divergence to the upside indicated short covering, not new longs. It's not healthy for the upside auction in that regard. Okay? So today we had we had a gap open. We gapped higher. The overnight looked to continue that move to the upside. It was unable to. We opened right at a important inflection level. We peaked over it. We didn't see anything, so we went the other direction. Does it make sense? It always seems to make sense looking backwards, but it's so hard looking forward. But we had a lot of signals this morning. We had the weekly kickoff that we peaked over and couldn't hold above. And then we added the value area special situation to the downside, which, that's never an easy play because, it's the assumption or the ability to correctly assume that we've reaccepted value from the previous day that puts that play in play. Sometimes, the market can show you that it's accepting lower price and trade higher until the very last part of the day, because that rule states it's at some point during the day the market is likely to return to the other extreme. Crazy markets. So, anyways, today's Thursday, tomorrow's Friday. Unemployment numbers tomorrow. Probably the most important number of the week. Not that there hasn't been plenty of other ones. Be ready. Get rested. Be good to yourself. Be good to each other. Pray for peace, strength, and freedom. And I will look forward to seeing you tomorrow morning on the market forecast. No recap tomorrow being Friday. So we're going to see if we can't make a little bit of money early and then go play golf. What do you say, rusty golfer? Maybe we can put up a bird. On that note, I'm going to let you go. Have a good night. Again, rest up. Be ready for tomorrow. Always opportunities. Always opportunities. We're going to see if we can catch some. Blessings to everybody. Be kind to each other. Have a good night.